Inflation. It is the word that we hear every day in the financial news. The Federal Reserve is aggressively raising interest rates this year and repeating the mantra that the US is in a period of high inflation. And prices for many things, such as food, are clearly higher. Rents are also higher, as is the overall cost of living. But, all around us, there are signs of economic pain and damage. Gasoline prices were high earlier in 2022. But gas prices peaked in June and are now hovering around their pre-pandemic average. The labor market is tight. But every week, there are layoff announcements. So, what is really going on? What does this mean for inflation, or is it really deflation? What does this mean for interest rates? What does it mean for the US economy? And, what does it mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. The Federal Reserve is aggressively raising interest rates this year. Their chairman, Jerome Powell, keeps repeating the mantra that the US is in a period of high inflation. In fact, every time the stock market has a rally, Powell makes a high-profile doomsday speech. Food prices are much higher, especially in restaurants. It is hard to hire workers and every local business seems to not be able to hire enough workers. Amazon and Starbucks are fighting rising labor power and unionization. But house prices seem to be crashing. And many people are afraid of losing their jobs. But Q2 corporate earnings have been universally weak and disappointing. FedEx withdrew its full-year guidance that it just gave Wall Street analysts during its Q2 earnings call. This shocking and highly unusual announcement comes as the United States teeters on the brink of recession. FedEx told Wall Street analysts of significant cost-cutting measures because of what it called softness in the global shipping industry. FedEx announced the closure of 90 offices and 5 corporate headquarters buildings. They also announced a hiring freeze. CNBC's Jim Cramer on Friday said, FedEx's warning of worsening economic conditions suggests the Federal Reserve is doing better in its inflation effort than expected. The Federal Reserve can take a step back after its meeting next week, said Cramer. If Fed Chief Jay Powell watched our interview last night, he might discover that he's made more progress whipping inflation than he might realize, Cramer said. Maybe Powell will hit us with another 75 basis point hike right here and then say maybe it's time to take a more measured approach in order to assess how things are going, Cramer added. Gasoline demand has fallen by 11.7% compared to September 2019. This month, gasoline consumption is 8.56 million barrels per day on average. This is actually less than in September of 2020 and 2021. This monthly decline is the steepest in 2022. It adds to a series of declines from the same periods ever since 2019. Gasoline prices spiked in June at a national average of more than $5 per gallon. But even as price declined since then, demand has also fallen. This is called demand destruction, where consumers cut back on driving because they cannot afford it. A spike in prices usually triggers a decline in demand. Is the Federal Reserve actually causing deflation by raising interest rates while it says that it wants to fight inflation? ARK Fund's CEO Cathie Wood thinks that the Federal Reserve has actually crossed over the line by raising interest rates as far as it has. Wood thinks that the Federal Reserve is focusing on lagging indicators while the situation on the ground is changing quickly. Cathie Wood thinks that Federal Reserve Chairman Jerome Powell is making a huge mistake as he continues to raise interest rates. Wood says that Powell is on a path of outsized interest rate hikes to tame inflation, and it is a disaster in the making. Inflation is quickly turning into deflation, Wood said. That means the Fed will likely have to pivot away from its interest rate hikes sooner than the market thinks, Wood continued. Even the oil price has dropped more than 35% from its peak, erasing most of the gain this year, she said in a tweet on Wednesday. Many commodity prices have plunged and are trading at or near pre-pandemic levels. Gasoline prices, in particular, have dropped quickly since the June peak of $5 per gallon reached in June. Lumber prices are down more than 60%. Copper is down 30%. Iron ore is down 60%. DRAM prices are down 46%. And WTI crude oil is down 35%. Retail company inventories have swollen in the past few months, compounding the reversal of inflation into deflation. And U.S. house prices continue to crash. Redfin CEO Glenn Kelman is predicting the biggest U.S. housing crash since the Great Recession. With the Federal Reserve aggressively raising interest rates, mortgage rates are on the rise. Sensing that home prices are in free fall, home buyers are now pulling back from the market. Big pharma companies AbbVie and Bristol Myers Squibb are part of a parade of layoffs and restructurings this year. Teva Pharmaceutical also cutting positions in California. But the biggest layoffs are at Novartis. Novartis is cutting 8,000 jobs worldwide to save the company $1 billion. Layoffs at big tech companies started with a quiet trickle, but now appear to be accelerating. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software giant, has cut hundreds of positions but declined to say how many. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Cloud communications company Twilio just announced a 17% layoff. Twilio will take $90 million in charges related to the restructuring plan in the third quarter. Wall Street investment bank Goldman Sachs just announced that it is planning major layoffs this month. Goldman Sachs said that the investment bank will cut several hundred positions in September. Goldman is the first major Wall Street investment bank to cut jobs. But it is not expected to be the last because deal volume has collapsed. FedEx told Wall Street analysts of significant cost-cutting measures because of what it called softness in the global shipping industry. FedEx announced the closure of 90 offices and 5 corporate headquarters buildings. Walmart is cutting 200 corporate employees. The job cuts are focused on merchandising and real estate. Car giant Ford announced that it is cutting 3,000 salaried and contract workers. The job cuts are in India, Canada, and the United States. Wayfair, the Boston-based home goods company, Wayfair is cutting 870 employees worldwide. HBO and HBO Max cut 14% of its employees, which is about 70 people. Bed Bath & Beyond, the latest meme stock, is cutting 20% of its corporate positions as part of what management calls a major restructuring. It is also closing 150 stores. Gannett, the largest news publisher in the United States, announced the elimination of dozens of positions. Electronics retail giant Best Buy has cut hundreds of jobs in its stores across the U.S. due to what they call a challenging macroeconomic environment. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. So, are we in a period of inflation or deflation? But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.